there, savvy home buyers and sellers. This is Jeff O'Leary, the Village Guru, Mississauga real estate broker, and welcome to episode 8 of the Coronavirus Real Estate Market Update. This episode is going to cover the dates of May 13th to 19th, 2020. We're going to go through the numbers, and we're also going to look at a new study that the Toronto Real Estate Board did about home buying intent over the next 12 months. This is a quick episode with really interesting facts. You're not going to want to miss it. Let's go. So here we are in week 9 of lockdown in Ontario. Just like the past weeks, things continue to get better. The province is slowly reopening, and I can sense through the public that there's a sense of optimism that hopefully we can get back to some type of normal in the near future. But again, we're not here to talk about that today. We're here to talk about real estate. So first off, let's go over the numbers for Mississauga from the week of May 13th to May 19th, 2020 versus the same time last year. And when we look at it, listings are down approximately 59% from the same time last year. Now, when we look at sales, they're down a whopping 75% from the same time last year. And there's really no surprise there. I mean, we didn't have coronavirus last year, and combined with the fact that after the May long weekend is generally when the real estate market hits its busiest part of the year. So stay tuned. I still believe we have a spring market that's probably going to be delayed into the summer and even into the fall, as pent-up demand will be taken care of later in the year. All right, so now let's get to the most important question all home buyers and sellers have, and that is, Jeff, what's going on with house prices? So like all the episodes so far, we're looking at semi-detached houses in Mississauga between the price ranges of $600,000 and $900,000. And the reason we do this is because in order to get numbers that make sense, you need to compare similar properties in a similar area that fall in a similar price range. So when we look at semi-detached houses in Mississauga, we can see that sale prices are down approximately 5.5% compared to the beginning of March pre-coronavirus. In terms of sold to ask ratio, homes last week were selling at 100% asking price on average, which shows that sellers are listing their homes in the range that's reasonable for the market that we're in. Now, when we look at average days on market, it has crept up a little bit to about 25 days on average to sell a home in Mississauga. However, well within the range of a healthy market and historical figures. So not to worry there. All right, so now we're going to look at absorption rate for semi-detached houses in Mississauga, because by looking at the trend over time, this can give us the best hint of what might happen in the future. So using the same chart we've been doing since the beginning, we're tracking the number of new listings on the market versus the number of sold and terminated properties on the market. And as you can see, since the middle of March when this all began, listings took a severe drop where throughout the month of April, we seem to see new listings and sold and terminated kind of staying in tandem. Last week, we had a little bit of a spike in new listings. However, when we got to just this last week, again, the sales climbed over the amount of new listings. Inventory is remaining low. And again, in order to see a lasting, sustained change to real estate prices, you need to have a lot of new listings and not a lot of sales, which creates competition among sellers. But as it stands in this segment, the inventory remains tight, which means home prices should remain stable. And when there is a rebound, I would predict if it remains like this, that we'll see pent-up demand force prices up even further. All right, so now I want to change the subject because the Toronto Real Estate Board did hire Ipsos Public Affair to do a study on home buyer intentions in the Greater Toronto Area over the next 12 months. I will put the link to the study below so you can see it for yourself, but I just wanted to highlight a couple of things in the report that I think would be interesting to any home buyer and seller. So first off, the good news. Home buyers still have intentions that are in line with the 5-year average of wanting to buy a new home in the next 12 months. Now, the study did indicate that home buyers do have a little bit of uncertainty regarding coronavirus. However, the same thing did happen in 2008 with the subprime mortgage crisis. A lot of buyers sat it out for 4 to 5 months just to wait and see what happened. However, overall, the report shows that nothing's really changed and that the situation we're in right now is abnormal. And you got to remember something. A lot of people start looking at what it's like today as what the future is going to be like in 1 year or 6 months, and you can't do that. I've been really good in my videos not to make assumptions because we don't have all the facts during this time. However, at the same time, I'm not going to allow people to comment on my videos and basically say that it's all over, we're going into the next Great Depression. I don't see that really happening. Bottom line is this will pass, and the fundamentals of the market will remain the same. Again, when we look at real estate prices in the long term, what's going to happen in the GTA? Let's focus on interest rates, let's focus on population growth, and let's focus on economic activity, because those are the factors that are truly going to affect your investment in the long term. Well, there you have it. I hope you enjoyed my latest coronavirus real estate market update. If you like this video, give it a thumbs up, subscribe to my channel, and share it with your friends. I'm Jeff O'Leary, the Village Guru. Have yourself a safe day.